As discussed earlier, it is critical that the assessors research and document each sale and assess properties based on full and fair cash value on the same January 1st date. To accomplish this, all property attributes need to be fully identified at the time of sale because all the data will be based on this particular sales date. Assessors need this information to determine which sales are or are not representing 100% market value. Therefore, every sale should be reviewed and investigated if need be. There are important resources used to determine the validity of the sales. They are the Registry of Deeds, real estate brokers, and buyer-seller questionnaires. In addition, many assessors use online websites such as MLS, which enable them to view current pictures and see property updates that may not have been reported. Verifying sales is critically important when it comes to valuing property and compiling the sales database. All properties that sell should be inspected. This will enable the assessors to validate the new sales price, document any special circumstances, verify the existing data, and to monitor the property to see if any physical changes have taken place. Conducting an inspection allows the assessors to capture a snapshot of the property in its current condition. Sending out questionnaires to the buyer and the seller is an additional tool that can capture information that sometimes isn't readily picked up during field inspections. These may uncover private financing or additional circumstances of the sale that wouldn't normally be found. In addition, with so many properties now listed online, many assessors reference the Multiple Listing Service, or MLS, which typically has updated photos and may even include deed information as well. When researching sales, assessors need to easily identify valid sales, also called arm's length sales. The concept of an arm's length transaction allows the market to ensure that both parties in the deal are acting in their own self-interest and are not subject to any pressure or duress from the other party. Requirements of an arm's length sale include the following. It has a willing seller and buyer not under compulsion to sell or buy. Arm's length sales should be verified for being readily open to the general public on the open market. Both sellers and buyers are assumed to be knowledgeable about market conditions, and property is on the market for a reasonable period of time. There are sales transactions that are considered invalid when compiling sales data. These invalid sales are also called non-arm's length sales. A non-arm's length transaction is a purchase transaction in which there is a relationship or business affiliation between the seller and the buyer of the property. Some examples of non-arm's length sales include a sale within a family, a bank foreclosure sale, a private sale to an abutter, a sale not advertised on the open market, part of an estate sale, or a sale involving a government property. Invalid sales should never be included in any sales analysis, as including this data would most likely skew statistical results. Sales are the primary indicators of market value in a community. Therefore, to accurately reflect the market, it is important to determine whether a market sale is arm's length or not. Any real estate sale that is not arm's length will be labeled as such or coded out, and not be included into the final statistical analysis, which will be discussed later in this module. The Bureau of Local Assessment publishes its Property Tax Classification Codes booklet on the DOR website. This booklet contains both the non-arm's length sales codes and the sales report, or LA3, specifications. After verifying all arm's length sales, you create the sales database, which is stored in the CAMA system. Remember that CAMA is the software package used for assessing real and personal property. You must include all facets of sales details when entering the data. Every parcel is assigned its own record card and parcel ID. This will be used to verify all data and help to accurately track if any changes were made. The sales database also identifies the location, the property's tax map IDs, zoning, and the exact parcel size. It will also list the sales history including the sales prices and sale dates. It will have the exact building measurements with a property sketch, list its style, show the land and building costs, and also determine the construction grade and current condition of the sale. What is the LA3 sales report? Each year, assessors need to prepare a final sales report called the LA3 sales report that is submitted annually to the Bureau of Local Assessment. It includes every property sale in the community, whether it is arm's length or not, for a designated time frame. This is a requirement. The LA3 sales report is used in conducting assessment sales ratio studies to indicate whether the community is in compliance with assessing at full and fair cash value. Details of the sales are included with assessing data such as date of sale, map block lot or parcel ID, seller and buyer names, addresses, property type, sale price, assessed value and proposed and prior assessed value, plus assessment sales ratio. The LA3 sales report is a key document. Everything flows from the LA3. It should be clarified that not every sale, but all those sales over $1,000 go on to the LA3. What is an assessment sales ratio? An assessment sales ratio, or ASR, is a measurement representing the percentage of a parcel's assessed value, X, to an arm's length sale, Y. Ratio studies are used to measure the relationship of assessments to market value. This will be discussed later in this module. Please review the example of how to calculate an assessment sales ratio before moving on. January 1st, 2017 is the assessment date for fiscal year 2018. The assessed value of a property is listed as $500,000. The sale price of this property was $510,000, and it was determined to be an arm's length sale. The assessment sales ratio is calculated by taking $500,000 divided by $510,000. The assessment sales ratio, or ASR, is 0.9804, or 98%. The statistical analysis period for each fiscal year on the LA3 sales report is assessed as of January 1st, applying calendar year sales from the preceding year. As an example, fiscal year 2018 officially begins on July 1st, 2017. To analyze a sufficient number of sales, the LA3 sales report is required to use calendar 2016 sales. It's important to remember any sale that is not arm's length will be identified on the LA3 sales report, but not be included in the final statistical analysis. The Bureau of Local Assessment tracks the data for both valid and invalid sales of each community. So the LA3 sales report includes all sales recorded over $1,000 during this time frame. In summary, collection and analysis of sales data are required standards for the local assessment process. Property valuations or assessments are based on full and fair cash value as of January 1st. Vital sources used to determine the validity of sales are the Registry of Deeds, real estate brokers, bank appraisers, and buyer-seller questionnaires. In addition, online services are available and very helpful. Market value is the price that a willing buyer and seller mutually agree on while the property was exposed to the open market and has no special circumstances involved. Each party is working in their own best interests. You need to identify and verify valid or arm's length sales to accurately develop and support their methodology before entering information in CAMA. The CAMA online system must be updated annually. Any invalid sales should not be included in any analysis. The LA3 sales report is used in conducting annual assessment sales ratio studies.